Hi guys, it's your boy Bliss Billion Dollar, your FX mentor, and in today's session we're going to talk about support and resistance in price action. So without wasting much of the time, let's get started. So you remember we defined support and resistance, I think, in the second lesson, and we said support is the price level where buying is strong enough to interrupt or reverse a downtrend. Then resistance was defined as a price where selling is strong enough to interrupt or reverse an uptrend. So basically what it means is that when price hits a support level, it has to change direction and start going up. And if price hits a resistance level, it has to change direction and start going down, right? Yeah, so having a skill to be able to spot out the support and resistance, the skill to be able to draw support and resistance nicely gives you an edge in the market. So let's continue, guys. So I'll talk about the three types of support and resistance. So this is something that I'll talk about deeper in the intermediates, right? Because here in the beginners, we're getting acquainted with the knowledge. Intermediate, we'll add more and dig deeper, right? Yeah. So the first one is the normal horizontal support and resistance levels that you are probably most familiar with. Then the second one, I'm going to talk about broken support, which eventually becomes resistance, or broken resistance, which eventually becomes support. Then I'll talk about dynamic support and resistance levels. So let's now go into deeper, into these things and dig deeper. So the horizontal support and resistance. Here is an example. So when you have, usually this kind of resistance happens when you have a sideways market and you have your resistance there and your support there. So how do you determine to say this is where I'm going to put my horizontal, or this is where I'm going to put my support level? Basically, you should be looking for 2 or more touches. So 1, 2, 1, 2, and you're able to draw that line to say that is your support or resistance. Basically, that's the first rule, right? So we don't just see any level and we say that's support. So we can see here 1, 2, and we drew a line there. 1, 2, 3, we drew a line there, right? So now I have to mention that support and resistance is not a single line. We should look at it as a zone. Why? Because there are instances where you see how price didn't touch exactly just up on that line. It actually went a little bit down and started going up, right? So it should not be like a single line like this one, but then it is a zone. You should look at support and resistance as a zone. And we'll know how to plot those zones once we learn about IFC candles, order blocks, and all that in the intermediates, right? So that's support and resistance. Then how to find horizontal support and resistance levels on a chart. So if price has been going up and down for some time and it hits a price level and bounces up from there, that's called support level. And if price has been going up and hits a specific level or zone where it cannot continue going upwards, then that becomes your resistance level. Any further and then reverses, that's a resistance level. Yeah. So when price heads back to that support or resistance level, you should expect that it will get rejected from that level again. The use of candlestick trading and on support and resistance becomes very handy in these cases. So like I said, when it comes to spotting candlesticks, let's use them on points of support and resistance. If it forms anywhere else, don't be interested in that candlestick. Only be interested in the candlesticks that form on support and resistance. So we've actually learned about the candlesticks, and if you see any of them forming a support and resistance, then you should be able to take them. So significant support and resistance levels. So not every support is significant. Not every resistance is significant. If you really want to take trades that have high potential for your success, you should focus on identifying significant support and resistance levels. These are levels that are formed in large time frames like the monthly, weekly, daily, H1, H4, right? So you should focus on the higher time frames. So the higher the time frame, the more significant it is. Even when it comes to spotting candlesticks, the higher the time frame, if you spot it on a higher time frame, then it is more significant than the one that is. Let's say, for instance, you spot a candlestick, a reversal candlesticks on H4, and the one that you spot on H1. So the one that is on H4 is more significant than the one that is on H1, right? Just like that. And when price react to these levels, they usually tend to move for a very long time. So when price hits this level and breaks, they actually move like for a very long time. Here's an example of that price. Okay, here's an example. Yeah, you see support and resistance drawn those lines, and here we're able to anticipate to say it will move, it will go up like that. So we buy at support and sell at resistance. I hope that is clear. We'll be buying at support level and selling at resistance. That is another rule. So support tend into resistance and vice versa. So there are times when support would turn into resistance. These actually become stronger zones. Let's see what we mean. So you see this particular point up there is resistance, of course, then support is this, the one that is down there. So now if price goes like that, it's in a downtrend, it breaks this and it comes there. So it might reverse from there to make what we call support becoming resistance. So it was initially support here, but once price touches it and starts going there, it becomes a resistance. It breaks this one, comes there, and all that. So this is also another kind of support and resistance. So if you have price breaking and retesting there, you can actually draw your support and resistance zones. And this is what we can see on the typical charts. You can see breaking and it reverses from there where it was support, it becomes a resistance and all that. So where support becomes a resistance, these are significant points that you can take note of, and where resistance becomes support, these are significant zones that you can take note of, right? Yeah. Okay. Let us go on. Yeah. So similarly, in an uptrend, if resistance turns into support, you see, then that becomes a significant level. So this is the resistance, and we see price breaking, then it comes to this point as the resistance. Here we can make our entry, we can buy. Boom, breaks, comes to retest this resistance and starts buying like that. Boom, retest, comes to make this resistance and starts buying. We'll learn more about all these types of mitigation and all that, right? Yeah. And this is just a typical chart that we can look at. Yeah, so it is better to draw support and resistance line across the edges of congestion areas where the bulk and the bars stop, rather than the cross extremes. So so here is the thing, when we trade support and resistance, there are certain rules that can help us determine whether it is strong or not, or the rules that we can follow when trading. So whenever the trend you are riding approaches support and resistance, tighten your protective stop loss. So if you had entered at support, you had bought at support, and price begins to approach the resistance level, you should be looking at exiting as well as or locking profits. So support and resistance are important on long-term charts rather than on short-term charts. That's something that I mentioned. Then a good trader monitors his markets using several time frames, but assign more weight on longer ones. So you have to do what we call a top-down analysis. You start on the daily, you check where is the support and resistance, blah blah blah, all that. You have to go in, you check your support and resistance on the daily, you go on the H4, you check your support and resistance on the H1 and all that, right? So if price dip below support and then rally back into the support zone, they show that bears have lost their chance. So if price breaks the support, you should be waiting for it to come back to retest. So here's the thing. We have that, and we have that. And if price breaks, let's say it's going like that, and if price breaks like that, we should be expecting for it to come and retest, then it starts going down like that, right? That is what it means. And the support resistance level must be tested at least 3 times for it to be reliable. So it has to be tested, let's say like that, and 1, 2, 3. So the third one you should be selling just like that until it breaks out structure, or it breaks like to the upwards, just like that, right? Yeah. Usually when strong resistance is broken, it goes in a severe uptrend. So if if a strong resistance is broken, then we'll have a long uptrend, just like that, right? That's what it means. Yeah. Okay. If you understand how price action acts in a trending market, you will predict with high accuracy when the next impulse will begin. Another way to catch the beginning of an impulse move is by drawing trend lines. So we shall learn about trend lines also. Trend lines are just another way of spotting support and resistance. So well, that was it about support and resistance, and I hope you really enjoyed the lesson. It's something that is very easy to understand. There's nothing too complicated. It's something that should be very easy for you to understand, and you should be able to spot these things on your chart. Remember, we are not theoretical traders. What you need to do is now to go on the actual markets and be able to spot these levels. Of course, if you fail and all that, that is why I'm here. That is why I'm here to guide you, right? But of course, with the live sessions, you are going to be equipped with the right information. So that was it. I remain your favorite coach, FX mentor, a Bliss $1 billion.